I'd love for you to dig into that piece in particular, because when I've heard you talk about this concentration piece, at the front end, it feels somewhat counterintuitive. But I'd love for you to explain where concentration factors into that investment thesis. Why is it better to have greater concentration in a smaller number of partners?
Well, I would say like a simple example for kind of over diversification. If you think about your portfolio, if you're invested in a partnership and they own 20 stocks, and you have 100 million and it's equally spread out, right? You have $5 million worth of exposure in each of those 20 stocks or 20 individual assets. If you own 20 of those names or 20 partnerships like that, all of a sudden you have 400 stocks in your portfolio. So now you're essentially an index fund. Like quantitatively speaking, you're an index fund once you get that diversified. But you still have this kind of active management layer of fees. And if you are paying a carry on those funds, like it's even more problematic because you're short that basket of call options on performance, and being short a basket in options is way worse than being short an option on a basket.
So not only quote at some point in the future. That's a nice little quote. Right?
Yeah. So it's really tough, like probabilistically speaking, for that portfolio to perform well over large periods of time. So we think about our portfolio as kind of this aggregation of these underlying exposures, and then we have a fee and liquidity structure layered on top of that. Now, I think a lot of times when you get siloed approaches to portfolio management, and a lot of people do it that way, and I'm sure it can be done, but the guy running the public equity portfolio and the guy running the private equity portfolio, he's basically kind of trying to maximize his performance. He doesn't necessarily care what this guy over in hedge fund space is doing or the guy over in real estate investing is doing, right? He's got this kind of silo of assets, and he wants a diversified portfolio, right? So he's limited to how much career risk, even though he may have an investment over here that's in, biotech related, and we may have very similar investments in the private portfolio. But again, like what he cares about is his slice of the portfolio. Whereas, we're looking to diversify the portfolio at the kind of top-down level, but within each asset class, we could care less how much diversification we have, knowing that we want to be broadly diversified across asset class and geography at the highest level.